So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviours, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out. Hello everybody, welcome back. So we're down towards the $60,000 range, okay? And there's a lot of flapping around. I can hear it and I can see it. There's people on the street burning their houses down, flipping cars over. It's all going crazy right now. But really, you know, I've been talking about this at least this last week. You know, the last drop before the moon, and you know this could be the last dip before the moon. There's two actual videos here explaining that that we should be prepared for that, exactly that. Now those sort of videos, they don't go down very well. In fact, I had some bloke on there saying he's given up on me. He's given up on watching my channel now because of this clickbait. But it's not. I don't do clickbait. If I did, I'd have a picture of my face with a mouth wide open, you know, screaming all kinds of ridiculous things that people would like to click on. Anyway, so it looks as though we're getting that dip, and this dip could continue further. Maybe not today. We've come down to a significant level, front run basically. It's the $61,000 zone, but we've pushed down further than that. Essentially got a wick lower than the main area of support. Based on the 4 hourly, our 200 exponential is here, which is about 61,300. And so I would have expected, and kind of do expect to see a turning up from around here, from the $60,000 zone to around 61,300, and that should, I would expect, push us back up to at least the $63,000 zone in the short term. So just looking for a short term bounce on this one at the moment. And again, we could easily come back down further. On the Patreon, I was talking about how 55,000 wouldn't surprise me at all if we came down to those levels, but personally there's major area of support pretty much where we are right now, $60,000 flat, and then 59,000, which is the green 50 exponential, bottom of the Bollinger Band, and the 50 simple moving average, all coming in at 58,700. Now this is based on charts, right, and the TA of the chart. However, I should let you know that there are other things that could push this down, as they have in the past. If anyone remembers this, obviously in retrospect this is the Wyckoff distribution, but throughout this process, towards the end of it, there was a whole range of things that came out. Bitcoin bad, yeah, Bitcoin bad for the environment, China bans Bitcoin, Elon Musk doesn't want Bitcoin as a payment system, and so yeah, insult to injury. I mean, this would have gone down anyway, but insult to injury, right? So bear in mind, you know, there's some things that TA is good for, which is, like I say, anticipating a further drop or anticipating more upside. But there's some things that just cannot be accounted for. And if there was to ever be a time for whales or market manipulators and the powerful to emphasize this dip, now would be the time to do it. So be prepared. Be prepared. There may be some FUD coming out. Now that's not based on TA, that's just based on personal experience, and you've probably recognised that too. And again, when you see FUD, generally speaking, it's actually bullish, right? It gives you the opportunity to buy the dip. Maybe not immediately, although it is always a good idea to stagger buyers on the way down, but FUD equals opportunity. And it's as simple as that. So basically, I'm not expecting that is going to be the case, but I'm just saying that could happen, and you know, we could go deeper than expected based upon powerful people slagging off Bitcoin. You know, so just wait for that. If it doesn't happen, great. It means that we can look at this chart and trade it reasonably appropriately. So when it comes to buying dips, it's not for me to say. However, I am looking for the last dip before moon, as expected. You know, as I've said here and here, the last dip before the moon. And the reason I make these videos is because this is my trading strategy, right? It's essentially a documentation of how I play the market, what coins I do, what targets I set, what expectations I have, and it's nothing more than that. YouTube doesn't bring me much money, and it's not really for that. It's become a thing that I end up doing now, but it's not for views. It is what it is. Like I say, if I wanted some clickbait, I would go to town. I would say XRP to $5,089. Now, was it $589? I just put videos like that up every day, if I wanted to become a crypto YouTuber. That's all you really need to do, just say stupid things like that. Anyway, so we're getting the dip now, like I say, as anticipated, and we'll wait to see how deep this dip will take us before the bounce. This dip could take us down, straight down to these levels, although I would expect a bounce around 60,000, but you could get a deeper wick down to these levels where I would expect this is where the bounce would come from, and the bounce would likely bounce from around about between 58, 59, a wick down to those levels, likely bounce all the way back up to about 63, which is the top side of this, the center of this Bollinger Band, the 20 weekly, the 20 daily, and the 21 exponential, all around there. But other than that, yeah, allow for this dip to take place. Look, at the end of the day, the money flow index is trickling down to a nice steady low, and yeah, it can be uncomfortable when we get down to these levels, but the lower we go, the nicer it will be when we turn up. Like I say, this is never a good indicator to use to spot bottoms, but it can provide a very nice opportunity, I suppose, to see where that lows could potentially get close to. So this was no good here. Again, this was in the wake of the FUD, but these ones are more appropriate. This is where it began to be traded again. A relative low here, a nice big move from the low to the top here, and continued up. And even with the money flow and it's trickling down because more people are buying Bitcoin than selling it, we had a very nice run of 80% on Bitcoin there. Again, next time we approached a relative low, it was around here. And then we had a very nice run up of yet again at about 66, 67%. Okay, very nice. And again, money flow index trickling down while price action remaining relatively static. So we're getting quite close to a relative low, I would say. And again, we're not looking at this to spot any kind of bottoms. This isn't what it's for. However, when it does finally work its way up, we've already seen we've had an 80%, we've had a 60%. So if we broke down to, let's just say, the $55,000 range, which is where I'd expect a decent low to be put in based upon previous price action, and then we moved, let's just say, a modest 60%, let's just say, from where we are at that point. We're $87,000 basically. Look, when we're dealing with big numbers, it feels more dramatic, and especially if you're overexposed to altcoins that emphasize these dips, it will definitely be dramatic. It's why I'm always saying, at this stage in the market, a larger Bitcoin position is always a better Bitcoin position, a better position in your portfolio, because it's well, like I say, it governs the overall market. However, we did establish on the live stream that lots of altcoins, not all, but lots of them have a very, very nice looking setup for end of November. So anytime after the 23rd throughout December looks like a very good time to be in alt positions, right? But again, we've got to wait until that 23rd of November kicks in. We'll see what relationship the signals have at that point to the price action. Might be void, might not be, but it does look like that there's not going to be much being able to stop it unless there's a dramatic crunch down in the market. I don't think that's the case. So either way, I'm just going to leave it with you there. Like I say, this is not out of the blue. This is not something that should be shocking to anybody. We have spoken about it over the last 3 days on 2 occasions, and for the Patreon members, we've spoken about it each session. So, like I say, we'll see how this one plays. If we get the bounce from here, or if we get a mega wick down to around the mid 50s, no big deal. It's all perfectly okay. If we start to break down from there, then fine. We could rule this out as a major, maybe a major top, and then we could be looking to come down to the lower range all the way down here. But is that relevant to start talking about that now? No, it's not. No, it's not. We're ranging in a very bullish asset, right? There's lots of futures, lots of derivatives, lots of longs, lots of shorts, all getting liquidated. We could see this even when you go down to to an hourly time frame. We can see how dramatic it's been. All the way up, all the way down, up, down, up, down, up, down. Everybody's getting liquidated from both sides of the spectrum. Everybody. It's all getting completely liquidated, and that's basically what I think is really going on here. It's a matter of shaking out both sides of the spectrum, the people who are basically over keen on their futures trading. And I'm not a massive futures trader. I do it on occasion, and I am looking to go massively long, to be honest with you, at the most appropriate position. We don't go catching knives with futures. We don't. You short into weakness where appropriate, preferably in a bear market. and you long into strength when you have it. Catching knives on with derivatives is essentially what's causing a lot of this pain going on here. People just getting too greedy. You will kick yourself really when all you really needed to do is essentially buy a dip. That's okay. You can buy a dip, but don't try and long a dip. Because you're basically very likely to continue with this process of liquidating more and more and more. Same with people trying to short. You will be liquidated also. Long into strength, short into weakness, preferably in a bear market. Right, it's a fair old ramble of a video there. The idea is, let's not get worried. It was all expected, and now that it has come down to these levels, we get excited because we have lower prices to either go long from when it turns around, or just buy dips. Anyway, I'll leave it with you there. Thanks for watching, guys. Hope you have a nice day. Take it easy.